focus on the Q2 earnings. PNB Housing has reported its Q2 numbers. Significant improvement in the asset quality. We've also seen that the NII and the net profit during the quarter have seen an improvement. The net profit especially 46% year-on-year surge for this one. We've actually seen the NIMs being steady and the asset quality also continuing to be healthy at this point in time. The loan book and the disbursement were also up by 5.5% and almost 19.5% respectively as well. But to get more insight on these numbers, what has really contributed to the growth in the bottom line and the outlook, now I'm joined by the top management of the firm, Girish Kousgi. He's the MD and CEO of PNB Housing, now joining in. Welcome, sir, and thank you so much for taking the time out for this discussion. Good set of numbers, and the brokerage houses have also given a thumbs up to the earnings. They've also come out with higher targets after your earnings have been reported. Help us first understand the key contributing factors which led to the sharp growth on the bottom line, and is this sustainable?
Good afternoon, Sakshi. I think we had a very good quarter two. And if you look at the performance, I think there's performance on all the parameters, whether it is top line, whether it is bottom line, margins, asset quality. I think overall, it's been a very good quarter for us. And starting from revenue, last year, quarter two, we had a one-off. I think discounting that, we have shown a growth of about 17% in revenue. Net interest income, the growth is 35%. PAT growth is 46%. In terms of spread, it is 2.59. NIM is 3.95. And I think overall, if you look at it's been a decent performance. And as we had guided this year, the book growth is going to be 17-18%. I think we will get there in next couple of quarters because normally H2 will be far better than H1. And on disbursement also, we would reach guidance of about 23+% growth. So I think overall, it's very, very good. I think the reason why we are able to maintain profitability is because of two, three reasons. One, we were earlier focusing on prime. So I think of late, we have now moved to more profitable segment within prime business. And number two, we have started affordable, even though we started about 8 months back. There is very good traction on affordable. And we have reached a book of about 750 crores, and very shortly we'll reach the 1,000 crores. And quarter on quarter, we are logging about 65% growth on the affordable business. Even though the book is very small, I think a lot of potential in the next few quarters to come.
Okay. Retail loan growth for you has been about 12% in Q2. I wanted to understand more about the guidance going forward. Are you sticking with the, mid-teens or like higher teens, 17, 18% right here for this entire fiscal?
If you look at the growth on retail, let's say about 3-4 quarters back, it used to be slightly negative or flat. We've been working very hard on this. I think now we've reached to a stage of 12.2% growth on retail book. I think this year our guidance is 17 to 18%. We'll be able to reach 17-18% of book growth. As I mentioned, quarter three and quarter four will see huge lift in disbursement, and therefore the book also would grow to that level of 17 to 18%.
Okay. You've also been able to resolve a major NPA account, sir, and this is to the tune of 784 crore rupees, as you have reported. Share with us the asset quality outlook that you have for the entire fiscal.
I think our focus in last few quarters, has been to work on asset quality, both on retail and corporate. And we had guided that with every passing quarter, our GNPA on both corporate and retail would keep coming down because our recovery efforts are quite substantial. And recovery is always going to be more than slippages. And that is what has resulted. I think the one which came through was kind of a one-off, and therefore we thought that we would strengthen the balance sheet. So going forward on asset quality, every quarter we will see improvement on asset quality as well.
Okay. Sir, give us a sense on your loan mix, the current mix right now, and where do you see it evolving when we talk about both the prime lending, affordable, as well as the corporate lending and the retail lending, sir?
I think as of now, we are focusing only on retail. Corporate book, we are degrowing because we had to work on the stressed asset pool. I think now it is almost done. So we will restart corporate in about 2 to 3 quarters time. And then, corporate, when we start growing, at its best it will be less than 10%. And out of the balance, the focus on prime and affordable as a mix in next few years is going to be about 60 and 40. But as of now, affordable is very small, so it is gaining traction. Incrementally, this year, I think we will close 12% from affordable, and this mix would keep changing in the years to come.
Okay. So on the net interest margins, I wanted to understand steady or a slight negative this time around, but what is the trajectory you expect?
See, on the NIM, again, if you have to talk about last year, quarter two, there was a one-off. No, leaving that one-off, if you see, there is a 83 bips improvement compared to last year, quarter two. So YOY, NIM has improved by 83 bips. So we had guided no NIM of about 3.5%. This is long-term steady state. As of now, it's about 3.9, 3.95. I think this would be maintained for a few quarters. But as a guidance, we would like to say it's 3.5%.
All right. So let me also ask you about the festive demand, because we are just at the peak of the festive season right here. How has the demand been for you this entire Navratri? And of course, the festive season started off in August itself with Onam coming in. But this is the peak season where a lot of housing loan demand also comes up for you. Help us understand the kind of loan demand that you've seen on ground, the average ticket size of the loan demand that you've seen.
Demand is quite robust, but I think during the year it just picks up from quarter three onwards. Quarter three and quarter four will be really very good for us as a company and as well as to the industry as such. So there is a huge upside in terms of disbursement for the entire industry in next couple of quarters.
Okay, so what's the trend that you've been witnessing? We've been seeing a whole host of stories say that the demands for luxury houses has superseded affordable housing this entire year. We've seen especially those high-end properties and the numbers being sold off on the first day itself. The property was launched and on the day one it was sold off. Such stories had been like flourishing all across our screens also for a long time. Your own thoughts of whether you've seen the similar kind of a demand for the luxury houses and the loans for that one is much more than the affordable housing?
Premium and luxury houses segment has seen a very significant increase in demand. At the same time, on the affordable side as well, I think the demand is quite robust. Only thing is, given the ticket size, and the effort to build the book on affordable, it takes time, and therefore you would always see that prime and super luxury segment on the overall prime side would look much faster and bigger. But affordable is it's like an annuity business, long-term annuity business. The growth would be very consistent, but I think demand is quite robust.
All right, fair enough, sir. Thank you so much then for being with us on this edition and helping us understand the insights from your current earnings, and all the very best to you for the future quarters as well. Hope to catch up soon again to understand more about the business outlook going forward, sir. All right, and now let's quickly get back to the markets now. Remember, PNB Housing as a company, it's performed well on the stock markets. If you look at the last 6 months, a sharp surge is what we have seen. Today, it's down by 1.5% for sure. Remember, last 10-15 days, the stock was moving up, and therefore this dip after the earnings that buy on anticipation, sell on news is something that you could actually see. Brokerage houses, however, are positive on the company. In fact, a lot of brokerage houses have now given targets of even 880 and odd. Therefore, going forward from here, if you look at several of the reports that have come about, they're positive on the GNPA definitely improving. Analysts at Motilal Oswal have upgraded the rating on PNB Housing to buy with a target price of 950 as well. So that's a substantial upside from the current levels that you do see from here. And they also believe that the margin woes may subside even going forward. So that is a strong outlook for loan growth, and disbursements is something that is prompting all these brokerage houses to give a positive outlook on the target front as well as far as PNB Housing is concerned. Let's get back to the markets to see how the markets are shaping up. Now about a 98 points fall on the Nifty.